Markets were very quiet on Friday, so there was very little action to report on the currencies. There was no economic data out in New Zealand or abroad, so there was very little to drive direction in markets. Adding to the quietness in markets was the annual IMF meeting, which was over the weekend. This probably saw a lot of watchers stay on the sidelines, perhaps in hope that there'll be some new policy announcements related to the Eurozone crisis. However, there doesn't appear to have been any great new action, and it remains much of the same for the Eurozone situation. Looking at comments from the IMF meeting, it seems that Eurozone officials are coming under increasing pressure from their foreign counterparts to put together some more decisive and coordinated policy action. There is a growing consensus that Greece will eventually default on its debt. Now, given this, there are growing concerns that more needs to be done to shore up European banks' capital position. This is seen as a key step to reassure markets that any fallout from a Greek debt default will be limited. As it seems, Eurozone officials do not seem to be listening to this advice and remain fairly confident that they are on top of the situation with current measures. Given this, the Eurozone situation really does be a watch and wait situation, and anything can happen, but looking at the markets, they appear to lack any confidence that the situation will be resolved. Now, if we look at the past week for currencies, we saw some massive movements and a lot of volatility. New Zealand dollar fell against all the major crosses, and we saw a particularly sharp fall against the US dollar, with the Kiwi falling almost 5 cents. We saw the Kiwi up around 82 cents against the US dollar in the early part of the week, but from Wednesday we've seen steady declines, with the Kiwi ending almost at 77 cents against the US dollar, just heading into the weekend. And looking at this morning, I think it looks like the Kiwi will open up against 78 cents and suggests that it is finding some stabilisation at these levels. But going forward over this week, it does remain fairly quiet. There's not a lot of data from New Zealand or abroad again, so very little economic data to drive direction. So much of the sentiment will be coming from the Eurozone. I think given this, we should remain in a fairly risk-off environment, particularly with hard commodities falling. This will see New Zealand dollar on the back foot for most of the week.